mean, you can hit that up there. I'm going to be here today. I'm going to be just here to answer any of you guys' questions that you may have as far as investing long term and my day trading. Just to give you a little quick deal of what I do. I long term invest, and when I say long term, I'm talking like maybe 3 to 5 years plus, and then I day trade daily. And usually when I'm day trading daily, I only trade one thing, and it's the S&P 500. I'm not trying to set the world on fire and make 100 and 200% a day. I'm shooting for, anywhere between about 0.5% to about 1.5% a day. What I teach the students, especially starting off, is how to make 0.5%. And then I teach them long term when they buying stocks. Don't just buy the stock, but buy it and protect it on the downside. And so if you have any questions about any of that, I'm here to answer those questions. And I like the KISS approach. So the way I teach is just keeping it simple. Okay, because I'm not the number one guy in the classroom. I'm I was the slow guy. So anyway, I'm ready for whenever you guys are ready, and we'll be here for probably at least an hour, hour and a half, maybe 2 hours. But I want to be able to answer any and everyone that has a question. So take your time and let's get this ball rolling. For whoever want to start out or have anything.
Hey, Robert, I got a question for you.
Okay.
In some of your videos, you've said that sometimes world events affect trading. Is that something you can give me, like an example of an event that's occurred that you had to deal with?
Yeah. For instance, this war that just happened in Israel over the weekend, if you would have been looking at the futures, it happened, I think, that over the weekend. If you would have been looking at the futures over the weekend when it opened back up on Sunday night, they took a nosedive. And they didn't nosedive into that Monday. But then later on that afternoon, it started to recover from it for whatever reason, which I thought was pretty kind of weird because Israel is a really, really close ally of the U.S. So I figured with them being hit, that would affect us too. But I guess we done got used to the war with Ukraine, not Ukraine. It is Ukraine. No, it's not. Who we in a war with before? Who was the other war? Is it Ukraine? Okay. With Ukraine, I guess we done got kind of used to a war going on. So it affected us a little bit, and then we just bounced back from that. And part of the reason, I'll tell you this. August and September are two of the worst months of the year, okay? And after those 2 months, you have a tendency to try to rally on into the end of the year. So now when people see the market down, they're starting to buy it on the downs. So when they saw it down, they just kind of started buying it and carried it on into the, trying to position themselves on for the end of the year. But yeah, world events will definitely affect the market. And sometimes even smaller things than that. For instance, like you could have Europe cut their interest rate or raise their interest rate, or Australia raise or lower their interest rate, and it can affect, maybe in small little pieces, but it can affect the market here. Did that help out any? Great. Okay. Does anyone else have anything they want to ask?
I do.
Okay.
Hi, Robert. I'm Yvette. So I wanted to know, you talk about trading stocks, but do you trade options as well?
Oh, yes. Option trading is what I like the most. Okay, because when I'm trading stocks, I'm not day trading stocks. I'm only doing stocks in my long-term stuff.
Gotcha.
But when I'm doing day trading, I'm trading options.
Okay.
Yeah. Uh,
So that strategy of protecting your trade, you use that in options as well, or is that just with stocks?
that's just in stocks. That's more of a
Gotcha.
long-term strategy.
Okay, because I was
When it,
confused. I was like, how is he doing that?
no, that's a long-term strategy.
Gotcha.
When I'm day trading, and you sound like someone that may be familiar with options.
I am learning how to option trade now.
Okay. So
Mhm.
when you're trading your options, are you more of a directional trader?
Directional meaning I'm going with the, what do you mean by directional?
In other words, you want to buy low and let it go up higher on
Oh,
on your options.
I'm doing both. I'm doing shorts and longs. So I'm really, I guess they call it momentum training. And
Okay. So
yeah, price action, just reading the price and running with the price. So I'm in and out of a trade like within a couple of minutes. Now I'm not staying in all day.
okay. So you will buy a call and wait for it to go up and then sell the call, or buy a put and wait for it to go down and then sell the put, right?
Right, right.
Okay, cool. Uh, what I do is something a little bit different because the way you're trading or the way that style of trading is only based on the price of the stock. If you
Correct.
get that direction wrong, you can lose.
Mhm.
Well, what I use is I use price too, but I use it secondary. What I use first is time because time is something that we know for sure is going to pass. We can't stop it. It's guaranteed to happen.
Mhm.
Uh, when you trade in directionally, it's not guaranteed that it's going to go up. And
Right.
sometimes when you trade in options, as you may know, it can go up, but not go up enough, and you still could have it still could not get right for you.
Right.
So to me, trading time, and it's not with everybody, it's just the way I feel. To me,
Mhm.
trading time is a lot more, it's a lot easier, and to me, it's more consistent. Now, with that, the profits that I'm making is a whole lot smaller than
Mhm.
what you would make as a directional trader. But the trade-off is you're gonna have more wins.
Okay. Okay.
Okay.
Okay.
Uh-huh. Uh, great. So does anyone else have anything? Question? And if you do, just hey, I think you can raise your hand here and I'll call on you.
Well, I always have a lot of questions. So if nobody else has another one, I got another one.
Okay, that'll work.
Okay. So as far as like a long-term strategy for investments, like my
Uh-huh.
thought was I'm invested for my 401, but I want
Okay.
one of my goals is to create income from dividends.
Okay.
And I still have a little bit more time before I'm ready to retire.
Oh,
So my thought is, do you think it's a good idea for me to invest into like a growth um stock, grow the money, and then buy dividends to retire with, or do I invest in the growth dividends now, or the dividend stock now and build it up versus
wow.
going the other way?
Uh, those are good questions that you have,
Uh-huh.
but when you're trading, when you're investing in a 401k, you you can't really manage it the way that I invest because all you can do is either buy a mutual fund or buy this basket of stocks. You know, you can buy the ones that are more growth oriented, the ones that are more dividend oriented, or you can buy the blue chips, or you can buy stuff that marks the S&P 500. But you can only buy. You can't buy a stock and then put protection on it to protect you from the downside. So I don't really know how to tell you which way to go with that because 401k almost put the handcuffs on you for as the
Right.
way that I'm teaching people to trade. And it's a shame because if you could, when you put that put on that stock,
Mhm.
what you would make from that stock going down would it would way outperform a dividend. Okay.
Mhm. Mhm.
So it's it's kind of frustrating when I hear people talk about that, even though I already know it.
Mhm.
But it's just
So you're saying if I wanted to use that strategy, I would either need to work with a Roth account or an IRA account, or just work with simple investments.
you can do any one of them. You just can't do it in a 401k.
Gotcha. Okay. Well, right
Yeah.
now I'm on sabbatical, so my 401k is actually about to be switched over into an IRA. Um,
Okay.
yeah, so I think I have a little bit more options there.
Yes.
Okay.
Yes.
All
You
right.
can do it. When you do an IRA, you have a choice of managing it yourself or giving it over to someone else.
Yeah, I
I
had to think
prefer
it.
to
Yeah,
tell you to manage it yourself, and then
right.
you can buy whatever stocks you want.
Right, because they were getting paid more than me. At one point, I was like, wait, the stocks are down. Why are you still getting 1.1%?
Yeah, they get paid regardless, up or
Right.
down.
I know I
Yeah,
was in the wrong business.
yeah, yeah.
All right, thanks for
It's I have a few students that have started to do this compound collar thing that you hear me talking about a lot, and I wish that I could get somebody to debate that with me, but I don't know enough people that know enough about trading to debate the difference between the two because you know, Warren Buffett tells people you need to find a stock that you like that you would like to hold for that you would be willing to hold for 100 years. And that's great. But what he don't tell people is what he do with that stock that he's willing to hold for 100 years. He's probably selling calls on it and all kinds of stuff that he's doing with options, okay? He's just telling them because there's no way he could make 19-20% on average every year if he would just buy it and hold it, you know? So we're just learning how to use some of those same strategies that he's using, but they just won't let you do it in a 401k, unfortunately.
Hey, Robert, somebody had a question in the chat. I'll read it out.
Okay.
Before I read it out, for those of you all who have questions, you can hit the unmute button. You should see a little red microphone. If you have a question, hit that and then ask your question. But Kay asked, how do you choose which underlyings to trade? And she also asks, can you demonstrate how you pick an underlying, chart live, choose a strike price, and then place a trade?
Okay, I'm gonna have to ask her a follow-up question. Are you talking about for day trading or for a long-term investment? Is she on here?
Yeah, give her a second to see if she
Okay.
types the response in the chat box. Kay, if you want to answer the question, you can unmute your mic and ask directly. She says, okay, in the chat, she says options for trading income.
Okay. Okay. So she want to know how do I pick the underlying that I'm trading, basically.
Correct.
Okay.
And can you demonstrate how you pick an underlying, chart live, choose a strike price, and then place a trade?
Okay, can I demonstrate that? Well, let me try to talk it out and see if you get an example for that. I trade one thing. I trade the S&P 500. That's it. Okay. And I use probabilities and the expected move to decide how I'm going to trade. For instance, let me just give you this. If the stock is trading, say, like at 4,000, the S&P 500, and that day it looked like it's going down, okay? Well, what I would do then is I would go way up above it and sell a call spread. And then as either time go by or as the price go down, that spread is gonna decrease in value. When it decreases to the point where I'm making about 1%, I get out of that trade. So, and let me give you an example for that. I may put this credit spread on for 35 cents, okay? And I'm doing a spread of $10. Let me go back and explain this a little bit. In options, you have to multiply by 100 for the price. So if a spread is $10, that equals to $1,000, okay? Because 10 times 100 is 1,000. So I would do like a $10 spread. I would collect 35 cents, which would be about $35. Okay. And as time go by, or as that price go down, or both, that 35 cents will lose value. Okay. Even if okay, I'm up here and the stock is right here and I'm thinking it's going down. But even if that price turns and start to come up a little bit, as long as time keep going by, this 35 cents is still going to lose value. When it gets down to the point where that 35 cents is about 20 cents, which means I'd be in profit at about 15 cents, that would be about 1%. And let me tell you why. It's going to cost you about $5 of that 15 cents for commissions. And then you're going to make about the other 10. That 10 cents, which is $10, is about 1% of that $1,000. And then I'm done. And that's what I'm shooting to do for one day. And if you make a 0.5% a day, you have about 20 days of trading per month. That will get you 10%. If you make 1% a day in those 20 days, that'll get you about 20% a month. That's all I'm shooting to do. The S&P on average makes anywhere between 8 to 12% a year. What we're trying to do is make that amount per month in 12 months. If you do that, and this is the part that blew my mind, okay? And this is what made me start doing it. If you make a 0.5% a day, and I'm telling you, a 0.5% is not much, okay? We all know that. A 0.5% on $1,000 is $5. As we know, we would say, well, what's the point? It's only $5, right? But check this out. First of all, you're only going to be trading with $1,000 when you first start. Once you realize how great this strategy is, and once you put in enough practice and build up enough confidence and all that, you're going to be trading with more than 1,000. So let's just say for this example, you're trading with just 5,000, which is still not much, okay? But if you're making a 0.5% a day, which is 10% a month, and every time it grows, you use the money that it grows and start investing with that. Because keep this in mind, 10% of 5,000 is $500 a month, right? So about every $1,000, you can start using that money and making money on that. If you do that, in about 6 months, your money will double. Okay, so you could turn that 5,000 into 10,000 in about 6 months. This is making a 0.5%. So that means your money can double twice in a year. If you've done that for 2 years, you go from starting with 5,000, then you go to 10,000, and in 1 year you got 20,000. In a year and a half, you got 40,000, and in 2 years you got 80,000. If you start making 10% a month on 80,000, that's $8,000 a month. With that, a lot of people can retire. And because it doesn't take long for you to make that 0.5%, usually less than an hour, and sometimes way less than an hour, you have your time as well. And because we don't trade overnight, because we don't trade over the weekend, you're not exposed. So it allows you to relax and be at ease and be calm when you're not trading. So I hope that explains it a little bit, Kay, of how we trade. And you're not hunting for which stock is moving where and where it's going and have 6 screens on your desk and all of that. You got one stock that you're trading, and you're only trading one side or the other. That's not true. Sometimes we trade the other side or both sides. But because we know that a stock is only going to move so far one way or the other, and we try to be outside of those ranges. What I say is we put a fence up or a wall up on our stocks, and we just trying to keep it from hitting our wall. Or another way you could say it is, instead of trying to pick the direction that the stock is going to go, what we're trying to do is pick the direction that it won't go. Or here's another good example. I thought about this last night. Some of you guys won't remember this, but a long time ago, it used to be a cartoon I think it was Froghorn, Leghorn, about this rooster, this big rooster that say, if I'm a chicken, I can't remember what it was. But anyway, it was this dog that used to be tied up on a chain at this doghouse. And this chicken would go up to this dog and he would hit him all upside the head, hit him upside the head. And he drew a line where he knew that that dog couldn't go to. Okay. And he would step right on the other side of that line. And that dog would just be sitting there barking, but he couldn't pass that line. Well, that's the way we trade. We know exactly, well, not exactly, but we know about, and we know that by calculating what the expected move is for that day. And we get right on the other side of that line. And most of the time, once you start trading it, you'll see that when it gets to about that line, sometimes it'll go a little bit over. But we already prepared for it to go a little bit over. It stops, and then it just kind of goes sideways, or it'll turn back around and go the other way. That's how we trade. And that's why we can win consistently day in and day out. And to me, if you can't win consistently, you ain't winning. So anyway, did that help, Kay, without, kind of showing it, talking it out, I hope?
Yeah, that was helpful. Thank you.
All right. Maybe
If
in the
I-
long version, but hey, that's me.
Yeah, so you only trade one underlying. What probability of profit do you choose and what delta? And I assume it's 0 DTE since you don't hold
Yes.
overnight, right?
It's 0 DTE, and we try to use a 5 or less delta.
Okay.
All right.
And you don't do any technical analysis, right? How
We
do
do
you
some
know?
technical analysis, but it's very little.
So how do you know whether it's going up or down when you open up your account at night? You said you trade 1 hour into the day. That's when you start, right?
Roughly about 45 minutes to an hour is when I start. Yes. Technical analysis. I mean, I'm using simple moving averages, 250, 20. A lot of people won't know what a lot of that means, but yeah, we do. And you can use whatever technical analysis that you like. Okay. If you're even a little bit right on those technical analysis, it's just gonna make your trading life better. But I always have said that when it comes to picking the direction, I'm probably the worst. If you want to win on direction, pick the opposite of what I choose. You're probably going to be very successful directional trading, which proves that you don't have to be a good directional trader to win.
Do you typically sell calls or puts? Which one do you go with the most?
It depends on which way the market is moving. If the market is moving up, I pick calls. I'm sorry. If the market is moving up, I pick puts. If the market is moving down, I pick calls.
So 5 delta, what probability of in the money do you choose, or out of the money do you choose?
Say that one more time.
So you go 5 delta. How much probability of out of the money do you choose?
It depends on the day. It depends on where because it's not going to be the just because it's a 5 delta, you're not going to be the same amount of money, or the same amount out of the money on every day. It's different.
So I know for those who I want to join your course, but to put together the capital to start trading, and for the 3,600, that's kind of steep. Do you have any other means of getting in or watching you live trade for those with smaller capital
Accounts.
to start with? Yeah.
Yeah, I do, but the training on that is not live. It's what you get in that case is just the recorded classes. And it's a little bit over half of that price. I think it's still a good option, but of course I think if you're with me live, it's probably better. And what my course is twice a month, on the second and the fourth Thursday of the month, we do a Zoom call like this, and it's about 2 hours long. 90 minutes of it is me showing illustration and explaining and talking, and then the other 30 minutes of it is question and answers. And sometimes it's question and answers throughout the class. And then at the end of the class, I've learned this later on, after about the first year or so, to start giving homework. It's not hard homework, and it's, you know, I'm not grading you like to see if you pass something or anything like that. It's just to help you get a better grasp of what we're doing. And it lets me see if you're really understanding what we're going. And it also lets me know if I need to go back over something more. And then also, you can email me, well, you're emailing me your homework, but you also can email me questions that you may have and, you know, give me a chance to answer them that way. I try my best to try to make this as simple as I can. And I try to make it so you know you're not out there alone. You didn't just sign up for some class and you're taking it and then you never hear from the guy. Well, with me, if you send me an email, I'm pretty sure I'm going to get back to you that day. All right, that you have anything else?
Yeah, I'll keep quiet and let someone else put in the question.
Okay, you
Thank
sound
you.
like you're pretty knowledgeable as far as trading goes.
I just need a good teacher that I can access at a price I can afford. I'm interested. I want to get in. I just need to get over the fear. I have the theoretical knowledge, but I need a tutor to, you know,
Help get you over
walk
the
me
edge.
along. Yeah.
I got it. Well, I'm here for you. I mean, I understand that price can be kind of expensive, but when you look across the internet, it's one of the cheapest prices out there, and it's for as long as I'm doing this. Once you pay that, you don't have to worry about me trying to upsell you to another course or anything like that. That's it. That's the price. So, and the reason why I said that, I mean, I can't give it to you for free, guys. I wish I could. I want to help, but I just can't give it to you for free. It took me too long to get it. And I didn't mind paying when I got it. But what I hated was, as soon as I paid for the class, they start trying to sell me another class. And so I'm not gonna do that. When I say you the class, you got it. You got me. Okay. So that's the way I'm trying to do it in a way that I would want it. So anyway. But I do understand the price. Does anyone else have any questions? Next. Anybody else have anything written down, Cortez? Go ahead. All right, Lester.
Yeah, I wanted to ask, when you start off with 1,000 and you're new and you're trading, and let's say you get to 5,000, are you putting that whole 5,000, when you get your confidence up, are you using that whole 5,000 each time you take a trade? Or are you using so much capital?
First of all, that's a good question. And just to let you know, I'm a long-winded person, okay? So I don't just answer with yes, no, I have to. Some people say I like to hear myself talk, but hey, this is the way I see it. When you first start, you don't even use no money. I want you to use the, Thinkorswim paper trading software, or just write it down in paper trade if you have time to watch it yourself. Next, after you do that, and I prefer you take, say, like 5,000 you're trading with on paper, and before you go live, double it. That usually takes about 6 months. Then you go with that 1,000. Okay. And when you're trading, you don't just have an exit price for when you win. You also have an exit price for when you lose. Okay. And you need to be disciplined to follow that exit price for when you lose, because the way that you learn how to win, and people don't want to hear this part, but this is the way it is. The way to win is to learn how to lose, okay? And you got to learn how to lose right, because with this strategy, it wins so much, okay? What your job is, excuse me. What your job is to make sure that you don't have no catastrophe and a super huge loss, okay? That's your only, well, it ain't your only job. You got to put the trade on, but that's your second job, but it's probably the most important. And if you get that right, you got it down. So with that, After I grow it to 5,000, yes, I keep going until I get to 10,000, and then I get to 20,000. I keep on going because I only started with the amount that I could afford to handle in the first place. Okay. And then I let that keep going. And now, will I take income from it? Yes. And will you maybe finally get to the point where you say you want to stop? Yeah, you may get to 100,000 or 200,000 and stop. What made me get so interested in this strategy, okay, because I used to didn't trade this way because 0.5% sounded stupid to me until I got a calculator and started calculating. But I had a brother who had a friend that was trading like this, and he was trading with $1 million, making 0.5% a day. And some days he didn't even make 0.5%. He would make like 0.3 instead of 0.5. Okay. Well, he was making about $70,000 to $80,000 a month with that. Okay. It blew my mind when I figured out how you could do that. And I'm not saying that I have $1 million, but if you have, let me explain it to you this way. And this is part of the reason why you keep going. When you see how quick you can make 0.5%, it's gonna blow your mind, okay? But here the thing is, I was looking at something on CNBC, and it showed you how much money that you needed to have a modest life in retirement, and it showed it from state to state. In Hawaii, you needed about $120,000 a year, okay? And they added in 20% for just in case stuff happened, emergencies, right? Well, the cheapest state was Mississippi, and you needed about $56,000 a year. Okay, the S&P averages somewhere between 8 to 12% a year. Let's just use 10 because that's an easy number and it's in the middle. Okay, if you need to make 56,000, let's just call it 60,000. You need $600,000 to make 60,000 a year. Okay. Now, check this out. If you take 60,000 and you learn to make 10% a month, you're going to make 6,000 a month. And 6,000 times 12 is $72,000. Guess what? You don't have to work so hard and so long now to have a retirement. Your hard work is learning how to make 0.5%. So, to me, that's kind of mind-blowing. And it actually it really highlights how powerful making 0.5% a day really is. Thank you, baby. And so, and the way that I give an example of what 0.5% is, I used to say, all we're trying to do is take the skin off the orange, right? And then that's when I was trying to make anywhere between 1 to 4% a day. Now I say, all we're trying to do is take the skin off an apple, because 0.5% is like, but anyway, I hope that answered your question. All right, great. Next.
So how do you manage your risk? Do you put a stop loss at the same time you place this trade, or you watch first before you put a stop loss?
That is a great question. And I don't use stop losses because I don't like them. Because when you use a stop loss, it gets you out at the market price, okay? And the market price could be $1.20, and the middle price may be $1.05, okay? So it'll be getting you out before you get there, for instance. And then the other thing is, because one of my students asked me the same question, so I had to check on it for her. When you put in a stop loss, you can't put in a profit price at the same time on a spread, at least not with Charles Schwab. If you just did an individual call, which is a one-legged trade, you could put in a stop loss and you could put in a profit, get out. But with spreads, you can't. And if you don't put in your profit exit and you wait to see it, you may miss it. Because I did a live trade for my students Friday and recorded it so they can see it. I got in the trade And then I started explaining it, what I done. Before I can finish explaining it, I was out of the trade. It took 7 minutes to get out of that trade. Okay. So, and the reason why I knew, because I have an alarm that goes off to let me know when I get in a trade and when I get out of the trade. So, and here's why. I got in for 35 cents and then I got out for 25 cents. Come on. You're done that quick. So now I don't use stop losses. I manage it by watching it. Did that answer it, Kay?
Yes, thank you.
Sorry for taking so long. I have this trade, guys. Does anybody have a question right now? Okay. I have this trade that I teach. It's called the free money trade. Okay. And what it is we have a way, excuse me, we have a way of calculating the expected move. Once I calculate what the expected move is, and I use my own way of calculating it, I say, okay, this is the expected move. And let's say the expected move that we come up with is 90 points for that day. Then I say 90 points plus another 50%. Okay. And let's say that's a hard number. Let's say the expected move is 50. Okay. Then I say 50 points plus another 50%. So now that's 75. So I put these trades on 75 points away from the previous day's current price. It's not easy to get that price, and I'm only trying to get 10 cents. Okay. But I'm putting them on with a delta of like 1 something or 2. And let me just explain to you what the delta does. What the delta does, it tells you your probability of the price of this stock passing my fence, basically. Let's say if I got a call and it's up here and the stock is right here, and this is at a 2 delta. What it's saying is there's a 2% chance by the end of the day that this stock price is going to cross this line up here. Okay. 2%. So I'm putting on trades like that. Okay. So with that 2% chance, I just let it ride throughout the day. Okay. And a lot of times I'm not even looking at the stock when I'm trading it. With that type of trade, and this is why I call it the free money trade. I can't tell you it's guaranteed, but it's only because I can't tell you it's guaranteed, because this trade wins. Okay. And all I do is just watch it from my phone. And I go out throughout my day and I go do my whatever it is I got to do. Go to the beach, jump in the pool, go grocery shopping, go whatever I do. Okay. And with that 10 cents, because you're only paying the commission to get in the trade and you letting it go all the way to the end of the day and then just expire worthless, you only have to pay commissions on one side. And when you pay that commissions on one side, that trade ends up making me about 0.8% for the day. And it's almost it ain't guaranteed, but it sure is close. Okay. So, and here the other part is, you know how I was telling you that when the stock is up here, no, when the stock is going down, we want to be up here. With this particular trade, we can be up here, and it's like that dog and the chicken thing I was telling you. We know it's going to come to us, but we know it's not coming all the way to us, because history just kind of shows that it doesn't. But just in case it does, we have a price that we have mentally that we're going to get out of this trade. So, and once you learn how to trade this way and you build the confidence up, you just know you can make 10% a month. It's not that complicated. It almost don't seem fair, but it is. Anyone else? Come on, guys, don't be shy. Go for it, Randy.
So when you're doing that type of a trade where it's way up here,
Mm-hmm.
and the price is way down here.
Uh-huh.
Are you selling an option?
Okay, good question.
Okay.
What I do is sell options. I'm not a buyer. The only time I'm a buyer is when I'm putting insurance on my stock, and that's for long term. But
Okay.
for day trading, I do what they call credit spreads. Okay.
Okay.
And here's why. I'm almost like selling lottery tickets. Okay. You know, and we know the win rate on that for the
Right.
people that's buying is not good. But the win rate on that for the people that are selling is very good. So what I'm doing, I'm selling pipe dreams basically.
Right.
You know, something that ain't gonna happen. So,
So
and just in
you're
case it does happen, okay, let me just say this right quick, Randy. I'm using $1,000 to make roughly $5 or $10. Okay,
right.
it's like, Robert, that ain't nothing. But I'm only risking about $100, which means on my risk, because that's where I say I'm getting out at. If I lose $100, I'm getting out of the trade. Okay.
Okay.
So on my risk, I'm really making about 5 or 10%. Okay. But I can't put it on unless I have this whole 1,000.
Right.
Okay. And then the sweet part about it is when you get into this, you're going to find a whole bunch of little carrots that are really, really good nuggets for you. Okay. And one of them is that you can trade calls and you can trade puts using the same money. Okay. And the reason why
Okay.
you could do that is because they know that it's impossible
Right.
to lose both sides at the same time. You're either going to lose this side or this side. You cannot lose both sides. But here the other part is you can win on both sides.
Okay.
So anyway,
You're playing the part of the casino.
I'm playing the part of the casino. Exactly.
That's great.
I'm because you know they're building these billion-dollar hotels and all this kind of stuff based on
Right.
probabilities. Okay.
Because they can.
Because they can. And because they're winning.
Yeah.
So that's what we do.
That's what I
And
want to do.
Lester, you said, when I make that double, do I use all the money? Well, when you go to the blackjack, I used to be a gambler guy. When you go to the blackjack table and they deal a blackjack, the house get to take everybody's money. Okay. Well, when these options that you trade expire worthless, you get to keep all the money. So, and here's what we know. I got this thing I call a crystal ball, right? And you know, a crystal ball kind of tells you the future. You know, that's kind of what a future is. Well, with that, we put in the expected move, we put in the delta, we put in volatility, we put in all this different stuff that we can use to kind of help with where it's going to be down the road. Okay. With that, it just helps us predict where we think the market is going to go. And again, we don't have to be right. We can think it's going to go down and it can go up and we still can win. Okay. So all of that, and the number one thing and the only thing that is guaranteed in the stock market, does anybody know what that is? And it's not just guaranteed in the stock market, it's pretty much guaranteed. Time will pass.
Yeah. Okay.
You know, and so whether you hear or not, time is going to pass. And that's kind of what we're trading. We're trading time. And with insurance, which this is kind of like insurance, right? They sell you insurance, but they know whatever date you have at 1201, it expires. And as long as you don't have a wreck between the time you bought this insurance and that expiration date, they get to keep the money. Well, we know that this stock ain't coming all the way up to this 2 delta. We pretty much know it. It ain't guaranteed, but we pretty much know it. And when the clock runs out, we get to keep the money. It's almost like not trading. It's almost like printing money. Okay.
Awesome.
But did that answer your question, Randy?
Yeah. Thank you.
Okay.
Appreciate it.
No problem. Thank you. Okay, Lester, what you got?
Yeah, I've been watching a lot of your videos. How do you determine like golden goose, compound collar, poor man spread? How do you determine? I mean, I'm sure that's in the course. You probably can't explain that just this quickly, but how do you determine which one of those to put on in a particular morning?
Okay. First of all, these are names that I didn't come up with, okay? The golden goose and the rich man credit spread and all that kind of stuff. Here lately, ever since my brother told me about this guy making 0.5% a day, I almost don't even trade the rich man credit spread and the earn butterfly and all that kind of stuff, because this golden goose is so golden but they're all credit spreads. It's just different names. All of them are credit spreads, okay? Let me give you the basic difference. I used to trade this thing I called the rich man credit spread. And the reason why I called it the rich man credit spread is because you're taking $5,000 to make about 50 bucks, okay? Well, the reason why I used $5,000 was because you could go way further out with 5,000 than you could with 1,000. But what I was doing before, when I was trading 1,000, I was trying to collect $1 on $10 on a $10 spread. Okay. Well, since I didn't come up with the golden goose, I'll collect 25 cents or 20 cents. Well, with that, I'm just as far out on that $10 spread as I am on a $50 spread. So now I would rather do 5 $10 spreads than to do one $50 spread. So that's kind of what determines it. And when you're doing an earned butterfly, and I used to love earned butterflies, I still do like them. But with the Fed raising interest rates and they won't shut up talking, and it's probably about 20 of them, and all of them have a tendency to want to say something and make the market move. I don't, as long as they keep doing something with this interest rate, I'm not going to do earned butterflies for the most part, because with an earned butterfly, you have a tight window to keep that stock within, usually about 15 points or so. And if you get outside that point, you could possibly lose. So I would rather just make the small amount with these little golden goose trades on, this 0.5% than to try to make a big amount with an earned butterfly. Because I've learned that, I told you I was long-winded, right? Because I learned that if you want to learn to make really big profits, and we all do, we all want these real big profits, right? Well, I've learned through hard knocks that the way to make really big profits is to get really good at making little profits. And they would turn into big profits. It's kind of like the way that you eat a pizza, right? One bite at a time. And you can eat that whole pizza. So that's my theory. Jim Rome said, how many push-ups? Can you do 100 push-ups? Can you do 1,000 push-ups? And, if you like me, the first thing you would say is no. Well, he said, well, what if you can take a break after you do so many? Well, if you take a break, you could do, you probably can do 100,000 push-ups. Because he didn't say how long of a break. He just said take a break. So if I do 20, take an hour break and do 20, take an hour break and do 20, I could do 200 push-ups. But if you tell me to do 200 push-ups right now, no. Well, that's the way we trade. Instead of trying to make 100% a day, we make a half, and compound it. And then by the time we get to 6 months, we really will have 100%. Not just 100% and then turn around the next week and lose it, So anyway, next question, anybody? Did that get it, Lester? All right, cool.
I have a question.
Go for it.
What resource would you recommend for a beginner to learn before embarking on your course? Because it sounds as though your students already have a level of understanding that I don't.
No, let me tell you here. The way that I learned about trading, and keep in mind, I used to be a mechanic. didn't know nothing about no finance, okay? And when I say mechanic, I'm not talking about electrical engineering mechanic or some type of, I'm talking about auto mechanic, the grease monkey. Anyway, if you know a lot, then I may have to unteach you. But if you don't know anything, I can start you from scratch. So I would say the best way is to not know anything when you get started, because then you can just jump in here. Because the people that know something, like I did when I first started, what you hear is the guy that's taking $300 and turning it into $1,000, and you want to get in there and do that, okay? Well, you can do that a couple of times, but you're gonna have a lot of losses. Well, I'm trying to show you a way where you can minimize those losses and just kind of make these small, consistent wins, win after win after win after win. And you can actually turn it into a way where you can actually have an income and retire on it. So not having a whole lot of knowledge in this is probably the best thing you can do, or you can have when you start.
Okay.
All right. Thank you for your question. I see we have a couple of new people coming in. If you guys have any questions, feel free to ask. Thank you for joining us here. Love having you.
Quick question.
Okay.
It's similar to what Mahalia just mentioned, because I feel like some of this terminology I'm totally unfamiliar with. And I have some experience with finance, but not with stocks and trading and all of that.
Okay.
But I do have a question about, in terms of how, if this works with the economy crashing, or, you know, things that are kind of outside of our control, does this method still work in those kind of conditions? Like if the value of the dollar continues to drop and all of those kinds of things.
Okay. I first of all, those are very good questions. Very good question, because guess what? When the market is dropping, at that point in time, what is your most concern? It ain't about making money. What is it about? Keeping your money, right?
Right.
When I went into the casino and after I done lost, you know what I used to say walking out of the door? If I could just get back to even, I'll be happy. Well, so the answer, the simple answer is yes. But here the sweet part is, and I'm gonna cover both of them, okay? First of all, when you're doing my long-term investing, and you hear me talking about putting insurance on a stock, options can serve as like insurance, okay? And when I'm saying about putting insurance on it, all I'm saying is putting a put on that stock. And the sad thing about it is, you can, you know, they call it a lot of things. They call it insurance, they call it a warranty, they call it a guarantee. They call them a lot of things, right? But they all warranties, or they all insurance. If you buy a refrigerator, you can put a warranty on it or a guarantee on it, or for this case, we're just gonna call it insurance. Heck, you can go to AutoZone and buy some brake pads, and they'll give you a lifetime warranty on it in case they go bad. You know, if you buy your television, you can put a warranty on it, insurance on it. Your dishwasher, all of that. But for some reason, they don't tell you nothing. You know, they even do, what are these calls you're always getting on the phone that's getting on your nerves? I can't think of them calls. They always call you trying to sell you something, okay?
Right.
Telemarketer.
To telemarketers. They even doing that, trying to sell you stuff on your car insurance, not auto insurance, but against repairs, right? But nobody gets on that phone to try to sell you insurance on your stocks. Isn't that something? So for you, we buy the stock, we put insurance on that stock, and if that stock falls like it's doing right now, you know, we're in a downturn in this market.
Right.
Not only will you be not sad, okay? You're gonna be hoping, come on, baby, come on, fall. Come on, fall, not go up. You say, come on, fall. Now, in this fall, it doesn't mean that you won't lose a little value. You will. But here's what you will do. Your insurance is gonna increase in price as that stock goes up, okay? And what you're gonna do is take some of that insurance and put some new insurance on it at the new price.
Mm-hmm.
And then you're gonna take the difference between the new price and what you collected and buy more shares of stock with it, okay?
Okay.
And you know, and just as well as anybody on this thing, if you doing that on a stock like Apple, Amazon, Facebook, and we could go on and on, Home Depot, Lowe's, Walmart. If you're doing that on all these stocks like this, you know good and well in 5 years, that stock is not going to stay down. It's going to go back up. So if this stock came down, you collected this money and you're able to buy more shares with it,
Mm-hmm.
what does that mean? That means when it does go back up, you're not going to be even, you're going to be more profitable. Okay? So yes, it does work in all kinds of markets. And then that's for the long term. Let me cover the day trading. With day trading, we're not in the market over the weekend. So we don't get no surprises like this country got bombed or this CEO got fired or whatever, and wake up Monday morning and the stock is on the floor.
Okay.
And we lost our money. And then here's the other thing. We learned to use the market against itself because we only trading the S&P 500 in our day trading.
Mm-hmm.
The S&P 500, I think it has about 506 different stocks in it. Most of the time, all 500 of them don't go down at the same time, but that's okay if they do, because then we just be on top of it. But we use it against itself by doing this. When the market kicks down, volatility kicks up. As volatility kicks up, we can go further away from it on either side. Okay, that's crazy. You would think if it's going down, you should be able to go only further away from it on the downside. But when volatility kicks up, you can move further away from it on both sides. So if it's going down, you can get further away from it on the top side. Okay, and you can get even further away from it on the bottom side. Okay, so. And then there's two types of volatility. Just to explain what volatility is, it's a fear indicator. You have two types of volatility. You got a statistical volatility and you got a implied volatility. Implied volatility is forward looking and statistical volatility is looking in the past, in the rearview mirror. Okay. We try to capitalize on both. But in a trade, you really want to capitalize on that implied volatility because when they think that the stock is going to move big, they jack up the volatility. When they jack up the volatility, they jack up the price of the options. That allows us to get a better price or to go further away. So we make money in all kinds of markets, okay?
Okay.
Up, down, and sideways.
Interesting.
I just covered the down. And we already know about the up. I got to cover this one more. What if you get an economy, and we're not there yet, but people keep saying we're going to get there. They call it stagflation, okay? It's when companies are not really growing, but they're not really losing. They just kind of doing the same thing. You know, they're not making no high increase in their profits. They're not losing profits. They're just kind of going sideways. Who ever heard of being able to make money when the stock is going sideways? Guess what? We can. Because we're trading time. We're not trading direction. Not trading direction only. So we still can make a 0.5%. And the biggest driver that moves the market is news. Okay. I don't care what nobody tell you. They may tell you that it's earnings. They may tell you that it's this. But when they talk about earnings, that's news. Okay. So the biggest thing that moved the market is news. We use news in our crystal ball to help us make our money. So yeah, we can make money when the market goes down.
My other question was, since everyone has a different level of understanding in terms of, you know, what you're teaching, is everyone moving through the class together, or do you offer different classes for different levels?
Another good question. Very good question. Everybody don't come into class at the same time. Everybody don't come into class at the same level. And you're not competing with that person on the other level. So we have a class and we record the class.
Okay.
Okay. So if you're running slow, if you running slow, that's the wrong word. If you feel like you can't keep up, you take the class. You may be like me, okay, like I was. They gave us the live class, and then they gave me these CDs and stuff to look at it, and VHS tapes. I would go to the live class, and I would go home and look at the video. And guess what? The video was the same thing as the live class, the exact same thing. Okay, maybe you had a different instructor, but I would watch them things over and over and over and over. And then when I go to the next seminar, I have another stupid question to ask him. Okay, so no, you're not going to be on the same level, but it don't matter because you got the videos, and then you can also email me and ask me questions anytime. I'm usually up at 3 or 4 o'clock in the morning answering questions, okay? Or even during the day. I will tell you this, and this is the bad news about trading. I hate to tell you guys this. Trading is a boring life, okay? It could be a very boring life. So I have time to answer your questions. So anyway.
Okay. I appreciate the information. That was helpful.
Yeah, no problem.
And Robert, I'm gonna add, Robert, when he says trading is the boring life, he's for real, because early in the morning, 10 o'clock, 11 o'clock, he ringing my phone up like, Cortez, let's go somewhere, man. Let's do something. This is almost every day. He is bored out of his mind because the rest of his day is free. So he's telling you the truth.
And sometimes when you make your profit, you need to stay out of the market anyway. What'd you say, Jackie?
I said, I'll take that boredom.
Yes. Anybody else have any questions on there, Cortez?
Somebody asked the question in the comments. They wanted to know, can you pay for the class in installments? And when you answer that question, I guess it might be a good time to talk about the bonuses that you have if they register and stuff like that.
Okay, good point. You can make it in installments, but here's how it works. It's an installment, but it's not really an installment. You can pay a half this month, and you can get the classes, but you don't get the recording. And then you can pay the second half the next month, and then you get the recordings and the class. With the class, you get it's lifetime, number one. That's the first thing. You also get a 1-hour consultation with that class that you can use at any time. I would suggest that you would wait maybe a couple of months till you build up enough knowledge to be able to ask a question that you really want a live one-on-one with, or wait till you're ready to start doing your trading or something and use it that way. Because all the other questions, you can either email me, because I don't want you to just use it and waste it. I want you to save it for something really good. You can just email me, or you can ask the question in the class. What else? Oh, and then another thing that you get with this is I try to do at least 2 live trades per month where you get to see me walk through a trade, okay? And I record it. You don't see every step because when nothing is going on, I pause it. And then if I see something, I come back and talk about that. But I let you see how I put the trade on, kind of what my mindset was at that time. And then I post that in the class as well. And then you have all of these previous videos that I've been doing now for over a year that you can go back and learn from. And part of the reason why this is lifetime is because from year to year, different things change. I may go to a different strategy. I may, because I'm always trying to learn, okay? I may have come up with something that I think is better, like this 0.5% to 1% thing. At first, I wasn't doing that. Now, this is what I'm doing. So, and then a few years back, the Fed wasn't talking every freaking day like he is now. So all of that makes a big difference. So that's kind of what I offer. And then also, I have another deal that you can get where you get almost everything, but except the live class, and it's $19.95, I think, but you don't get the live class with it. And you're gonna miss out on some of the homework too, because some of the homework I send out in the email. You won't get that part in the pre-recorded class, but you still have access to email me and all of that stuff. So those are the two things that I have. That's it. I hope that answered their question, Cortez.
So if y'all have any questions, you can hit the unmute button and just ask your question, or you can type it in the chat box.
When you're in the class and we start this class up, you know, you probably can't tell, but I'm not the most sophisticated guy. So my classes are pretty basic. You know, I'm just making it as vanilla, trying to put it on the bottom shelf so everybody can get it. And you want to know the biggest problem with me? Sometimes I get so excited explaining it to you until I'll say the wrong numbers or say the wrong word and get them twisted up because my mind is working faster than I can talk. And I have a few people in there that try to not a few people. I tell all the students, period. If I say the wrong thing, say the wrong number, let me know, because the people that are hearing this on recording, I want them to get the right information and not be wondering, did he mean to say 19 instead of 18? So if that's the problem, if anything that I have a problem with, that's the biggest problem that you'll have in class right there. Other than that, I put it down on the bottom shelf so everybody can get it.
There's someone with the phone number ending in 9068. Did you have a question?
Yeah. Hey, thanks. So I'm here listening in with my pops. I just had a question. So he's a big fan. He watches your videos. I had a question. So like for your entries, like you basically, just so I understand, you're using like the Greeks and you're taking like these spreads. Do you use like any backtested data or like what? Yeah, for your process, your strategies. Like what's kind of like your strategy for like your entries and your positions that you take? I just wanted to know more because my dad's like interested.
I don't have any back-tested strategies other than me.
Okay.
And my just getting in is just, I look at what the current expected move is at the time when I'm getting in. Let me give you an example. Let's say I come up with my expected move, and the market is moving live, by the way. Let's say I come up with my expected move, and the market look like it's going down, and my expected move is like 40 points, okay? I want to try to be 45 points, 40 to 45, 40 points or more away from where it is at that current time. And hopefully it's moving away from me. That's it.
Cool, thanks.
Mm-hmm.
Do you mind if I ask how well your students have done once they began investing like this?
No, I don't mind at all. I've got a few students that are doing pretty good, and I got a few students that's scared to do anything. But a couple of them have, I've had interviews with them that are doing pretty good. And, a lot of them are still trying to, they're still trying to get it. I have a lot of people that haven't done anything with trading or investing. So, and if they have, they barely know what a stock is, but they may not know what options are. Okay. And you got to realize that as a retail person, we only know mostly buying first and then selling. It's hard to wrap your head around selling first, waiting for something to get cheaper instead of more expensive, and then buying it back, you know?
Mhm.
So it's I say it's 6 months for a reason. Okay. It takes people a little time, and I keep in mind, I've only been doing this a little over a year. It was this guy right here in the red that talked me into bringing this out there and teaching people, because, you know, I'm just happy doing it on my own. But this is nice because now I have to try to come up with a lesson plan. It helps handle some of that boredom, right?
Mhm.
And there's no feeling like, okay, I just put a video out I think this weekend, of a guy that used to live here and now he moved back to New York, and he's one of my students. There's no feeling like listening to him talk about how he's trading. And he's not doing what I'm telling him to do. He done went on and doing some other things, making more than what I'm telling him, right? In fact, he's making way more than what I'm telling him to do. It's a little bit more risky too. And then I have a sister. Man, this lady here, boy, she take way more chances than I ever would think about trading. And I'm probably gonna be the person that's taking the least amount of risk, okay? Because sometimes I can be really conservative. And it's for a reason. I done got my head bumped a lot. So I know that when you look down the road, and not just at today and tomorrow, and you keep making these little profits after little profits after little profits, and you can have a really nice life, okay? When you can go and live anywhere, because you can make money from anywhere as long as I take this laptop with me and they have internet. So, you know, it can be pretty nice. Got anything else? Anyone else have anything, or you got anybody else that want to say something, Cortez?
Robert,
Yes.
being out in Mexico, do you have any troubles transferring money and that sort of thing?
No. The only thing that I hate right now is that the dollar is down.
Right.
But transferring money, and by the way, we're building this house, so we have to do a whole lot. I go to the bank every day, and we use TransferWise, and you know,
Okay.
all kinds of stuff to transfer money. But no problem. ATM machines is all over the place around here.
All right. Sounds great.
And we have a Mexican bank account, and you know, all of that.
Okay.
Yeah.
So I plan on coming and joining you.
Cool. We look to see you. Maybe
Yeah.
you can wake up one morning early and walk with me.
There you go.
Lester, what you got there, buddy?
Yeah, since we started the Mexico questions, that's what I got. I do a little trading and I make trades from my phone. When you get to Mexico, who are you using as far as your carrier if you want to keep doing that? I don't want my phone to drop, or I don't want it to have a signal. I heard you just say you do it too from your phone. So who are you using?
Yeah.
I'm hitting
I do it from my phone most time, but it's mostly to exit a trade or to watch it. But I'm using Telcel. No, I'm sorry. I'm using AT&T. And I got a plan with AT&T where, guys, you wouldn't believe it. I'm paying $120 for my phone a year.
With unlimited call and texting.
Yeah.
And calls to the United States included in that.
So, hey,
That's kind of rude.
it's kind of nice.
It's kind of rude. You know, we don't have plans like that in America.
Hey, I set it up to make you guys say, "Wow, $120." Then I threw that year out there on you.
I'm salty. I will admit, I'm salty.
This is not trading, but we're building this house, and they started putting a roof over my master bedroom, and the roof is made out of brick. And I'm thinking, man, when I was living in Dallas, I had to put 2 roofs on my house because of hail damage in 16 years. And I'm sitting here thinking, man, I'm never going to have to put another roof on this thing. I may have to reseal it, but resealing is a whole lot better than replacing. So I don't know. It's just different.
I know you and Cortez definitely have me considering a move to Mexico.
Hey, it's not for everybody.
Yeah.
But this don't have nothing to do with trading, but Cortez, you got to tell them about the earplugs. The earplugs, the ear
Oh yeah,
things.
oh yeah. um, this company reached out to me the other day. It's called Time Kettle, and they want me to, I guess in their minds, I'm some type of influencer. So I'll take it since they're paying me to do it. And but anyhow, they sent these buds. They look like AirPods. You simply put them in your ear. So it's two of them. And so if I was to walk into a store and the lady in the store started speaking Spanish to me, it would automatically translate it into English so I can understand at least what she's saying. I can also take out one earbud and hand her the other. And as I speak to her in English, it'll translate in her ear in Spanish. And as she talks back in Spanish, it'll translate in my ear in English. And so we can have a two-way conversation without having to hold microphones or telephones up to your face and stuff like that. So I got to demonstrate it. I have a week to make a video showing it in action. And but technology, just one extra thing to make communication a little easier.
How much do they cost?
I believe, and this is sad on my part because they gave me 1 week to do it. So I haven't looked at any of the material. I just handed the box over to my kids and say, hey, y'all use it and then y'all tell me how to work it. But I think the price is $199 or it's $299, one or the other.
Wow,
But I
that's
think it's
amazing.
I think it's $199 if I'm not mistaken.
Yeah. Very cool.
So with that, I already didn't like taking Spanish classes. So I'm probably not going to be taking them too much longer, even though I'm not now anyway. But anyway, guys, it is 8:16. And does anyone else have any other questions? Any kind, guys.
This is your chance to ask. He charges what, $195 for a telephone consultation. So this
Yeah.
is free.
This one is.
So if you got any questions, take advantage.
Yeah.
So
Don't
you can
feel
jump in
shy
and
like
start a
you-
class at any time. You can start with the class at any time. Okay.
At any time.
Okay.
And just pick up right there where you are.
So what if I brought a friend with me? Would I get a discount then?
Not really.
I thought I'd
But
just ask anyway. Worth a try.
hey. But if she's in the same household, y'all can be online together.
True.
And maybe she can give you a discount by splitting it with you. Just a thought.
I had a question about when you take these trades, is that considered like how do the taxes work on that?
It depends on what you're trading out of. If you're trading out of just your straight brokerage account, you have to pay taxes on the profits, whether you pull the money out or not. If you're trading in a Roth and you've had the Roth long enough and you're over the age of 59 and a half, you don't pay taxes on the money when you pull it out. If you're under the age of 59 and you've had the money in there long enough, you only pay taxes on what you pull out. And then, and that's it. And the same thing with an IRA, a traditional IRA, by the way. And for me, and I'm not no financial planner. It was another lady that asked me a question. She probably knows more about this part. But I would rather have my money in an IRA and pay taxes on the amount that I pull out than to have it in a regular account and pay taxes on everything that I make. And it's a whole lot less paperwork too. But that's just me. But, Big brother got to have his always. Anyone else? Go for it, Lester.
Yeah, this is not about tax. I just want to thank you and Cortez. I probably watched too many YouTube videos, but I believe in this case it paid off. You know, by you guys
Thank you.
networking together like that.
Yeah.
It's gonna. I'm looking at next January moving out there. I'm really serious. So
Cool.
I'm glad you guys network like that. And when you do that, it helps people. You know, so you doing that for Cortez or joining in is helping me, because I've traded with some people and everything you say is right. You pay for
Cool.
programs, they don't spend time with you. And the 1% turned me on to you. When you explained that in one of your videos, I was like, this is, because I've been burned with the quick money and I want to slow it down. So thanks,
Yeah.
both of you guys.
You know what, guys? Thank you for that, Lester. I appreciate that. I have one of my students on here, I see, and he just recently kind of started doing a compound collar. And if he don't mind, I'm gonna ask him to say something to these people. Roberto, Mr. Martinez, will you mind saying anything about whatever?
Yeah, no, not a problem. Can you hear me?
Yes, thank you.
Awesome. So I started the compound collar going on about a month. And in
Yeah.
that time, the great thing about it is just that, and let me see if I get good video, man, because kind of late, kind of, putting everything away here. So basically the great thing about it was, and I don't know if you guys have faced this, where you get into a trade. So you've got a stock, you've gotten educated on it, you watch it for a while and stuff, and then you say, you know what, this is the best time to put my money in. I see where it's going. You put your money in, you seeing that sucker, as they say nowadays, to the moon. Next thing you know, that sucker goes to the pit. So the great thing about the compound collar is that it doesn't matter. Really, it takes away that fear of like, is it going up or is it going down? Because, like, for instance, I got into Shopify, and as Shopify goes down, I'm taking in money. So because I was able to take in cash, I was able to buy more shares. So that worry of the stock going down is, I wouldn't say non-existent, is still there, but as the price goes down, I'm actually benefiting from it as well, just as if it goes up. Might not benefit as much as if it went up, but each movement, whether it goes up or goes down, has its benefit. So there's pros and cons. As the stock goes up, I can't take in cash. Me not being able to take in cash means that I can't buy more shares. That's part of the strategy. And so I've been doing it for a month. I've taken in quite a bit of cash because Shopify has been on a downtrend, and I was able to increase my position by 200 more shares of Shopify, which I was able to purchase with the cash I was taking in as the stock went down. So I haven't added another dollar to it, and I was able to buy 200 more shares. So this will be my second month in it, and I'm not rooting for that sucker to drop to the pits, but I'm kind of, I kind of like it when it goes down because I'm able to take in cash. And by taking in cash, I'm able to build up more shares in it. If you want to look at a great example, and one that I like to look at, is Meta. If you look at Meta a year ago, you're looking at about the $300 range. That sucker went down to 80. So imagine that you bought it at 300, and as that went down, you weren't too scared because you were taking in cash as it was going down. Well, it goes down to about 84, 85. I can't remember exactly what number it went down to. But in all that time that's going down, you're taking in cash and you're building more shares. Well, how many shares will you have by the time it goes down to 80? And then next thing you know, you're riding that sucker back up to 300. And you got this just a bulk of stocks that you've built up without spending another dime of your own money. You're just taking in the cash as it goes down because the way that we position ourselves, I mean, that's really what we do. So we benefit on the up and we benefit as it goes down. So because of that, like I said, that fear of, you know, anybody that bought Meta at $300 isn't holding on until it hits $80 and says, "Oh yeah, it's gonna," I mean, you're exiting, you're pulling that ripcord, and you're ejecting out of that thing, once it goes down like $50 or $100. And that's, like they say, as long as you don't sell, you don't lose. Well, you're gonna sell because no one can take that kind of pain unless you're sitting on a pile of, Scrooge McDuck money or something. But you're not gonna, you're gonna get out of it. In this case here, you're taking in cash, so the blow that you're getting isn't as hard. So you will hang in there. And I know that shop was down to 38 or 39, and Robert was showing me how to do the compound collar about a year ago. I think it was close to a year ago. And the great thing about Robert is that, if he sees that, you got the deer in headlights look, like blank stare, because he's telling me this stuff, and I'm like, I had no idea what you're saying, man. Everything you're telling me sounds crazy because I've never heard anything about, making money on the way down, owning a stock. And I wish I would have listened more when he was teaching me what he was teaching me, because now Shopify had gone up to about 80 some dollars. And I could have, started off at 30 some dollars, $38. So, but now I've matured a little bit more and I've learned more being with him. Um, so now it's like he went through the compound color again. I understood it better, and I'm in it. I'm in Shopify and Roku. I've got 200 extra shares of Shopify, and I got that in 1 month, and I got an extra 100 shares of Roku. So I'm just working the system, and I've on paper, because these stocks have gone down, on paper is showing a pretty sizable decrease in my account value, as far as what Charles Schwab shows me. But on the paper calculations and everything else that I've actually taken in, cash I've taken in, everything else, that decrease is actually blunted quite a lot. So my whole thing is, yeah, I want to buy low, and this is one of those ways where as it goes down, and I'm building up my cash to buy low, and then the hope, of course, is that it goes higher, which Shopify isn't going anywhere. Roku is kind of like the only, player on the market as far as, you do have the Amazon Fire Stick, but for a reason, the Fire Stick isn't really uh, considered to be even in the same league as Roku. So, I see those companies being some companies that'll be hanging around for a while. And so that's kind of one of the criteria is like you do want to pick good companies. You're not picking, penny stocks. We don't deal with penny stocks. Then when it comes to the golden goose, that's something that I'm still paper trading, and I'm trading every now and then. I'll trade it live. Definitely the free money has been is it is what it is. It's free money. Like, so and now I'm increasing my position on how much I'm going to be purchasing as far as the free money trade. I'm going to increase that as well, just because I've been doing it with Robert, and the results are the results. I mean, so I'm about to increase my position in that as well. And so if you're looking for a teacher that likes to teach, I mean, he says it himself. He'll talk about something like for hours, and that's proven to be true, because we'll have about 2 hour discussions about everything, anything, and nothing, just like Seinfeld. I mean, and we'll just have these conversations, but he's going to talk to you, and he's going to repeat everything that he's teaching you over and over again until you get it. Those sometimes those those classes that we have 2 times a month. I mean, he's sitting on that person is like, okay, you know, make sure that everyone knows what, you know, but he's teaching that everyone gets it. And if you don't get it, I mean, he just keeps pounding the whole thing of like, ask questions, and he goes through it. So it's definitely different from the classes I've purchased before. I'll say that, you know, flat out. It's definitely different because most of the times I'm purchasing a class, they give me the recorded lessons, and then you're kind of on your own. You have those, you know, Facebook groups or, you know, that they set up where you can put in your question and you'll have other students answer it. Well, in this case, it's not other students answering it. Robert's answering the questions, you know, through email. You know, you can send him an email, and so all those things, the hand holding, all these things give you more confidence. It gave me more confidence. And yeah, so I'm working that system. You know, so if, I don't know if that was enough, Cortez, or if anyone has any questions for me.
Thank you, sir. I appreciate it.
Sure.
Yeah. I know sometimes I seem like I probably talk way too much, but hey, you know what they say, when you're doing what you love, you never work a day in your life. So that's what I'm doing. Does anyone else have anything they want to say? A question? A comment?
Thank you for sharing that, Roberto. My question is, earlier you said you only trade SPX, but he's mentioning other stocks. Like, I'm trying to marry the two together.
Okay, great. I only day trade the SPX. For my long-term investing, you can pick whatever stock you want. But I do have a couple of things that stock you pick must do. It must move. And you prefer it to move $5 or more per month, okay? We don't care which way. We don't care how much which way, as long as it's moving $5 or so per month. Other than that, that's it. But as far as day trading, S&P 500. Long-term investing, individual stocks or individual index. But it has to have a lot of liquidity because we're moving in and out of options all the time.
Are you teaching your students about the long-term investing, or you're mainly focused on day trading, right?
Both. We're
Doing
teaching
both. Okay.
This is the way I look at it, Jackie.
Mm-hmm.
Day trading is like your job. Long-term investing is like your 401k.
Okay. Okay.
So we do both because you need both. You don't want to put all of your money in day trading. Okay.
Okay.
You want to put some of it in a little bit more easy, safer deal.
I have a quick question. Since you're looking at long-term investing also, what do you think about some of the AI companies? Are there any favorites you have, or is that something you recommend people investing in right now, since it's
What are some of the
relatively
AI
new?
companies?
I mean, I don't know them by name. I know that there's some that work in pharmaceuticals, in medical AI. There's a lot of different ones that are coming up. So I was just wondering what you thought about that industry in terms of investing.
AI, I mean,
Yeah.
you know, it's whatever stock you like.
Okay.
Again, I don't know a whole lot about which AI company is what, you know.
Right.
Here's what I look for. And this is what I tell people to look for. Find a stock that you like and that you trust,
Mhm.
because you have to believe that when it goes down, and we know all stocks are going to go down at some point,
Mhm.
you want to trust it enough that it's going to go back up.
Okay.
You know, that
Mhm.
and it has to move. It has to move, because if it don't move, we can't make our money on the options.
Mhm.
So we want it to move.
Okay.
That it?
I
Yeah.
think Lester got a question.
Okay.
I was just
Lester?
gonna piggyback for her. I've been with other groups, and the newer students always are trying to grab the newest stock. But like you said, stick to those you know. The hot stocks, like 1 year it'll be SPACs, you know, buying SPACs, and 1 year it'll be AI, and then this is going to go away. I mean, companies use AI. Every company, Meta
Yes.
uses AI.
Yes.
So we're all going to be using AI. Coca-Cola will be using AI. So you don't have to get an AI company. Just stick with the real companies. They're going to use that technology in the future. So
That's
stick
correct.
with the big boys, you know.
I agree with you on that. This is my theory, since you brought that up. Find stocks you know. And I told you it's easy to pick up a stock because everything around you is a company or a stock or something, right? But if for some reason you can't think of any, I say go to the stock finding place. You got 506 of them in the S&P 500, and they're mostly blue chip stocks. Find those stocks in that area that fit the criteria that you like, okay? But I will tell you one of them that not to pick, and that's AT&T. that sucker is like a flat line, okay? It does not move enough. But you just want a good company that you trust that moves. You get that, and you're gonna be okay.
So are you selling covered calls on those stocks when you buy them long term, or how do you profit from when they move?
Covered calls is a good strategy, except for one thing. If it goes down, you're screwed. So I like covered calls if you think the stock is going up. The problem is just because you think it's going up don't mean it's going up, right? Because otherwise, if we only bought stuff that we think that was going up that went up, we would never lose. Because we always think they're going up when we're buying them. So I like covered calls, and I even talk about covered calls in my classes. But I'd rather do the compound collar because I like knowing that I don't have to worry about which way it's going to move. If you own a stock and you're doing covered calls on it, for instance, right? And all of a sudden, the president dies. You think this market is going to stay flat? It don't care what stock you're in. People getting out of their stocks because they know that's a big blow. Will they come back? Yeah, they're going to come back. But it sure would be nice to know if that, we ain't wishing the president die, by the way. But it sure would be nice to know if that stock did fall. Not only do we hate that the president died, but we made money from it. We was able to get a little bit more cash from that fall, So that won't happen on a covered call. When that stock fall, you're hating it. Anyway, go for it, Kay.
I guess I'm just trying to understand. So compound collars for your long-term investing strategies, credit spreads for day trading. Is that right?
That's it.
Okay.
That's it in a nutshell. You have another question, Kay?
No, that's it. Thank you.
Okay. Yvette? Booney?
Yes. Yeah. So the stocks that you said need to be illiquid, that they need to be able to move. I'm sorry, liquid.
Mhm.
And you said you want it to move one way or the other a certain amount. Is it a thing as too much? Like a stock like Nvidia that moves a lot. Like, is that something that moves too much, or you just still would just go outside that ATR?
Okay. There's no such thing as moving too much, up
Okay.
or down.
Okay.
Yeah, unlimited.
Okay.
Even if it went to zero, we may not make a profit, but we are protected.
Got you. Okay.
Yeah.
Okay.
Nvidia moves too, by the way, but it's expensive.
Yeah, it is.
Very. Anyone? Okay, guys. If nobody else have any questions, I'm finna go eat some pizza. Hey, I enjoyed you guys. Thank you guys a lot for all of your questions. I really appreciate it. I hope this was helpful to you. And hopefully I'll see you in class soon. Y'all have a
Thank
good
you.
night and
Thank
have
you.
a
Thanks,
happy
Robert.
is it Columbus Day.
Thanks, Rob.
Thank you.
No, that was last month. Yeah.
Gracias
Thank
todo.
you.
Welcome, guys.
Thanks, Rob.
All right. Thank you,
Yeah,
guys.
thanks, Robert. Bye.
Bye bye.
Thank you.